Right. And in fact, our next guest says Cisco's first ever dividend reinforces his buy rating on the stock and could inspire more tech companies to initiate or boost their payouts to shareholders. Let's bring in Shaw Wu. He's an analyst over at Kaufman Bros, an investment bank that focuses on tech and media companies. Shaw, good to have you back with us. So no surprise to see them potentially doing this.
You know, it's a good move because this is definitely one of the ways to return shareholder value. And I mean, at the end of the day, I mean, this is the shareholders actually get money out of this. You know, buybacks help, reduces the share count, right. But this for a dividend, they actually get money in their accounts.
And so many people are focused on income-paying stocks right now, yeah. Because it's all about capital preservation more than, say, investing in growth stocks. You'd normally, though, expect a company like Cisco or these tech companies, other tech companies, maybe to be growth stocks.
Yeah, I mean, they still are. I mean, you know, if you look at the growth of the tech companies, they've been growing actually above the S&P 500 range. You know, high single digits, low double digits, and
it's not a commodity yet. Routers.
Not quite yet. Yeah, that's right.
Hey, so what do you think? 5 to 10 cents. Our team here, our crack dividend team, who've been really right on the money many times here, says about 10 cents a share, or 10 cents a quarter rather. What do you think it's going to be?
Yeah, I think it's going to be. John Chambers actually gave a range. He said likely between 1% to 2%.
Okay, so that works out that way.
Yeah.
So, what are you saying as far as other tech companies? We had this big story yesterday on Microsoft looking to possibly sell debt in order to pay dividends. Is this going to become a trend in the tech sector?
I think, you know, with the depressed multiples, and the companies frankly aren't too happy with that, paying a dividend should actually help its trading multiple. You know, if you look at companies like Coca-Cola, McDonald's, they trade. Arguably their growth rates are actually slower than Cisco, but they trade at a premium. And I think one of the key reasons is because of the yield, because investors are looking for yield, and hopefully this will enhance that.
You know, it comes at an interesting time when the government really wants to see companies putting that money to work, but perhaps in different ways. I mean, is this the best use of money, a company's money? We know they have very deep balance sheets at this point. I mean, is it the best use of a company like Cisco, their money?
Well, the good news is that they have a very strong balance sheet and they have very strong cash generating capability. So paying the dividend isn't the only use of cash. They'll still have use for share buybacks, for acquisitions, for compensating employees, you know, for incentives. So I think that they have plenty of cash flow per month to fund these different types of activities.
Why do you say, Shaw, when looking at the Microsoft situation, that you're not sure if it makes sense for them to issue debt to pay a dividend? I mean, investors have been clamoring for some sort of payout, and the idea is that it would cost them so much more to bring back cash or repatriate cash from overseas.
Well, in a situation like this, you would want the dividend to be paid out of cash flow. You know what they're actually making. Now, to borrow money to pay someone else, again, I'm going to leave that for Microsoft to answer that.
It's so cheap to borrow now.
Yeah, that's true. The cost of capital is low, and that's a fair point. But I think a dividend is typically it's paid out more out of the cash flow than anything. So
who else do you think might we see down the road? Well, in terms of the tech world, you know, giving out dividends?
I think Apple makes a lot of sense. You know,
will they do it?
Well, the thing with Apple, it's still a hyper growth company, right. And but they continue to build a lot of cash. They definitely have the profitability and the cash flow to fund something like this. And I think actually you're hearing more and more investors calling for it, and Apple has held off.
When you see big tech companies that are still big growth companies but generating so much free cash flow, I mean, what else can they do with that money? They've got to either put it to work in the markets, purchasing other companies, buying their own stock back, paying it back in a dividend. What else can a manager choose to do?
I think those are pretty much it. I mean, frankly, you know, those are the choices, and the dividend is new. It's newer for these companies, and for like a Cisco, for an Apple, you know, that's highly super profitable. It makes a lot of sense. And as I said earlier, at the end of the day, I mean, that's how you get the shareholders actually get funds out of this. They get money out of this.
In some ways, I mean, it really shows a maturation, if you will, of the technology world. Correct? I mean, that we're kind of moving on with the dividend arena.
It could be, but it's also, if you look at that's what happened to Procter and Gamble, Coca-Cola, companies that are viewed as blue chip. But paying that dividend with a yield, it's a sign of the company reaching a new level. I would say a new level of maturity and a new investment. It actually attract more investors, we think.
Does it change your view on a company? I mean, especially since investors are trolling for dividend-paying stocks these days. Do you bump up a rating if you hear that a growth company or a tech company that you previously wouldn't have thought of as a dividend payer is going to introduce a dividend?
I don't know if it's necessarily going to change opinions of analysts, but it definitely gives. I mean, for me, it gives more conviction, to the story that the company's comfortable enough to with its cash flow, not just the current cash flow, but future cash flow, to pay a dividend. And as we've seen with other companies out there like Procter and Gamble, Coca-Cola, McDonald's, it actually leads to a higher trading multiple.
All right, we're going to leave it there. Hey, Shaw, thank you so much.
Thanks for having me on.
Shaw Wu over at Kaufman Bros.